name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. After clearing up the chart, a little at least, what we have left shows the market still keeping within the May to October 2020 bullish shift pitchfork. The key feature has been the weekly key reversal down at the end of February. This prompted a move down that saw the market close below the long moving average, currently at 1943, 3 weeks ago, for the first time since October last year. This move down did not last, and we've seen prices move back up, but seemingly caught in the attractor that is the recent 50% Fibonacci line at 1967. Why have we gotten caught there? Well, I laid out the situation 4 weeks ago thus, and I quote, "Below we have the low from December 2020 at 1929, the rising long moving average, the 50% Fibonacci line of the October 2019 to March 2020 move at 1915, and finally the lower time of the same bullish shift pitchfork mentioned above. That's currently at 1914, end of quote. I also alluded to a possible scenario in the offing, and I quote again, "Breaking one or more of these key supports may very well trigger another pattern to take place, but this time it would be bearish." I've alluded to this already above. See, there is a chance, just a chance right now, that the November 2020 to date action could very well be a double top type action. It is very early so far, but the opportunity for one does exist. Look with caution on any venture lower, as it very well could be a trigger. End of quote. That is where we have sat these last 4 weeks. We're sitting on a trigger that no one has pulled yet. Watch this space, as patience with this is wearing thin, and we are, after all, still within a large bullish shift pitchfork. LME 3-month tin. The recent move back up was, as I pointed out 3 weeks ago, due to a bullish 2-day descending fork pattern made about 4 weeks ago, when prices ran into a sand trap, as I called it then, of the huge congestion area dating from 2013 and also 2014 between about 24,155 and 22,895, and extricated themselves out of it. This brought prices back up, peaking last week just over the compound Gann number, which in theory would be at 26,588, but in reality, as prices here move in increments of 5, turned out to be 26,575. Since then, we've seen prices move back down to just over the recent 50% Fibonacci line at 25,200. 3 weeks ago, I drew a bullish mid-January to start of March bullish Andrews pitchfork. This did not help at all, but the bullish shift pitchfork for the same period seemingly has. We are currently in between the lower tine below, currently at 24,455, and the middle tine above, currently 26,840. Interestingly, the lower tine has a partner, the rising short medium moving average, currently 24,350. So for now, this bullish shift pitchfork, especially between the lower tine and the middle tine, seems to be an early contender for the bullish angle of attack. Of course, this all now depends on what happens next week, but I note how today the market has punched up through the late February to date downtrend, currently at 25,545. Whether it will next attempt the March high at 26,575, and more importantly the February congestion between 26,500 and 27,000, that is what interests me now. Thank you for listening. This short version broadcast is essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.